we combine both value and quality, our starting point is to scour for companies that are trading cheaper than normal. And the metrics that we use are Benjamin Graham metrics: price to book, price to earnings, and price to cash flow. And then we apply these valuation measures over 3 dimensions. We look at the company versus itself, and then the company versus its sector, and then finally look at the company versus its country of domicile. Cheapness alone is not what we're seeking. We're looking for good businesses that are underappreciated, unloved, and undervalued. So what we do is blend quality with valuation. And how do we define quality? Quality, it's the sustainability of revenues, the visibility of revenues, the depth and breadth of margins, the consistency of earnings, the rate of return on capital employed. And we're not just looking for a one-off. We're looking for a company that is consistently able to generate high returns or higher returns and is making good capital allocation decisions. Having said that, we don't want to buy quality at any price. What we're looking for is that intersection of cheap and quality, value, undervalued, and a good business. So that is one of our primary pillars. So it's valuation. Second, we employ a mostly bottom-up fundamental stock selection approach. Third, we employ both quantitative and fundamental means. Because we're seeking opportunities, we're scouring opportunities throughout the world. We consider up to 40,000 publicly traded companies around the globe, developed and emerging markets, 48 countries in all sectors. It is a virtual impossibility for us to fundamentally analyze these companies. And furthermore, we can systematically screen downsize that vast universe to what we believe is misvalued or undervalued, or better yet, is trading today cheaper than it historically has. So that is on the quantitative end. Then on the fundamental work, we spend a lot of time attempting to capture the controversy. Why did the stock derate? Why did it fall out of favor? And why do we have a contradictory or a contrarian view with the market? The fourth point is that we invest in all markets, developed and emerging. And finally, we do invest in all market caps, and this is an important source of value add to us, because smaller and mid-cap companies tend to be a more exploitable universe as the markets tend to follow them less, own them less. They are more prone to being misunderstood and therefore misvalued.